Hello guys, it's your boy Gab, the Lonely Step Trader. And in this video, I wouldn't want to waste your time. I will just talk to you guys about why most of you have been losing in the market. Alright? You see, I need you to take your journal and put this stuff down that I'm going to mention. Number one is because of the trend. You guys are trading against the trend, and that's why you'll be losing money in the market. Let me explain that first, then I'll come back to the second one. As you can see, over here we have the market trending in a downward situation like this, in a downtrend, right? You all will agree with me that this is currently a downtrend, all right? So if you choose zoom, if you just choose zoom out, you understand that this step index is in a big downtrend from the start, from the onset. It's been in a big downtrend, all right? And you can see it traded upward for a while before it start dropping down. And just for the record, you guys can go back and check my video. I did analyze that before this move occurred in the market. I run an analysis and I said that this market was going to happen like this. I mentioned it that this market was going to, like, from this area. I mentioned that it was going to go up, then come down to this area. Now watch, keep watching out for it. Keep watching out for it. Stepping there to find its way down to this area. Alright, so we are currently at this joint, and that's why it paused and continued to the upside. So with that being said, let's just continue in our lectures. Okay. So I'm going to take these stuff out so we can continue. Alright. So I said one reason why you guys are failing in the market is because you people are trading against the trend. So now I'll teach you how to make use of the time frames. How to make use of the time frame. It's very important that you know how to make use of the time frame, because that's how you determine the trend, all right? And you know what to look out for. So some persons will tell you that they are not a day trader, they are not a swing trader, they are not a scalper. Bro, see, let me tell you what, you have to find an area and put yourself, you have to belong to an area. The reason why I'm saying this is because we have scalpers in the market, we have swing traders, and we have day traders in the market. You have to be either swing and day trader, or you have to be swing and scalper, or you can be all if you want. Don't just tell me you're not this kind of trader or that kind of trader. Okay, you have to be one. All right, so let's talk about the day trading system. This is the 24 hours. What I'm going to do here is basically focusing on this area. So in focusing on this area, I'll mark here as my highest, right? And I'll mark here as my lowest, right? Remember the topic, why people are failing in the market. All right, so I have realized that this step index is currently in the big downtrend, and even from here, from the daily time frame, we can confirm that we are in a downtrend like this, all right? But that doesn't mean we have to, like, we can't buy or something like that. Let me tell you what. You see, in as much as the market is in a big downtrend, over here we had a uptrend, over here, a uptrend. And from the look at things, the trend is looking like it has changed situation, and now it's going to start to come down. So on the daily time frame, put this in your sorry on the daily time frame, I've been able to mark the up and the down. So put this in your book. Let's delete all of this, because already now we know that we have our overall trend like our overall trend is downward, right? Let's go to the 4 hours time frame. On the 4 hours time frame, I'm going to walk you through what you would have done to be able to squeeze as much as you could from this market. All right. So currently now you can see that the market just broke structure from here. Notwithstanding, it has broken already from this side before. We are talking about the trend now. We are talking about the trend now. You have to be able to identify the trend before anything in the market. You already know my kind of strategy is a pattern strategy, all right? Let's talk about this area. As I told the market was trending like this, I know most persons try to sell this market from this side and bring it to the downside, and that's the reason why the market left this area, because of the force that entered it, and that was why it traded to this area. But because the trend changed, and that's why it couldn't complete the 90%, instead it continues to the upside. So you need to understand what one thing about the basics. The market moves in a zigzag form, all right? creating series of higher high, higher low, higher high, higher low, higher high, higher low. So if you had been trading in a way that you have to identify the trend first, you would have understood that this market changed structure as at when it broke this area and refuses to come down. Automatically, it disregarded this pattern, leaving us with what we call extended W and continue to the upside, double bottom extended one, alright? And keep giving us series of higher high and higher low, creating us fixing patterns around those areas while taking the market to the upside. And these areas are areas you could have capitalized on the small time frame. Okay. So with that being said, let's go down. Let's go down to the small time frame, like the 1 hour. The 1 hour where we are going to discover our current trend. Okay. So on the 1 hour, let's talk about let's talk about this side, how the market went up. You can see that on the 1 hour, the market has been going up and it has been fixing us with with patterns, like it has been fixing us with patterns, fixing us with patterns that has been taking the market to the upside. If we should go down to a small time frame, we realize that all of these areas are some kind of patterns. And this area right now, we have something we call breakout, all right? And it's equally a pattern. If we would have drawn it like this, and on the smaller time frame, it would look nice, okay? So over here we have another one like the wedge pattern, all right? And the market continues to the upside. If you look carefully, you understand that the market was just moving based on the trend. Okay, based on the trend. All right. So I believe you guys understand what I'm trying to say. So with that being understood, let's forge ahead. Let's face what's happening now. What's going on here? I think okay, yeah. So let's face now, because I love talking about now about today, so we'll know what to do. All right. So right over here, you agree with me that the market has changed structure as at when it broke this area around there. So we are currently in a downtrend. All right. So for the fact that we know that we are on a downtrend, what are we going to do? We are going to like look for sell opportunities. You understand, right? We look for sell opportunities. We are no longer going to look for buy opportunities. We look for sell opportunities, and we enter based on the pattern confirmation, the candlesticks, and otherwise. As for me, I use everything in the market. I use everything in the market. I literally use the Fibonacci to everything. All right, even indicator. All right, I use a lot of confidence. You see this indicator. If you are plot our indicator like this, you understand that in this area the market rejects and starts dropping to the downside. So if you weren't familiar with the trend, what would you have done in this area? Let's take this area for example as a case study. All right, you would have been like, this was an impulse, right? And this is a correction. Impulse to the upside, then correction. All right. Don't get me wrong. Most of you know what I'm talking about, and most of you know this is your problem. All right. So you would have been like, okay, like this. We have this here, and we have da 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 da. Let's go down to the small time frame, like the 15-minute time frame, where we'll see that stuff properly. Okay. So on the 15-minute time frame, you would have been like, okay, over here now we have our first touch, second touch, and over here you would have been like, okay, we have first touch, second touch, and on this area we'll be expecting the buy. So when the market shoots up like this, you'll be like, whoa, we are going up. So you expect a kind of gather around there, a kind of pattern around there that can take the market to the upside. But you forgot that the market is in a downtrend and not in an uptrend. All this pattern will work in all kind of trend, but it won't work forever. The reason as to why this market pulled up from this area and went to the upside is because we have a lot of people in the market that trade is structured and they want to take the market to the upside. And if you look inside here, you understand that there was a pattern here that formed, a descending one that broke to the upside after retesting in this area and took it to the upside. But it's not going to sustain your trade for a long time. No. Let's take for example that you left the chart to go ease yourself or go take your bath after placing your trade here, your entry here, having in mind that this market will come up to this area or possibly shoot to the upside. This is what you would have been in. You'd have acquired a drawdown and a loss. All right. So you also learn how to trade with the trend. If you had been with the trend, then you know that in the high area, those are the areas you want to enter your trade. In the corrective area, the corrections, impulse, the corrections to the upside, that's the pullbacks. Those are the areas you want to enter your trade. So first of all, you need to be able to identify your trend. Then you look out for the pullbacks so you can be able to get into clean trade and make good money from the market. All right. I believe you guys understand what I just illustrated over here. So with that being said, let's forge ahead to the second one. The first one is trend. All right. Before I close this trend chapter, let's still look at something. Presently now, the market is currently in a downtrend. Okay. Let me take this stuff off. This stuff. Let me take them out. All right. Excuse me, please. All right. So right about now, the market has changed its phase and is currently in a downtrend, in a downtrending market. Okay. So in a downtrending market like this, what are we expected to do? We are expected to look for sell opportunities. Sell opportunities, right? That's the only thing we are expected to look for. So in this area, after this impulse, what happened? We had a correction, and it was based on this correction the market dropped to the downside like this. So it impulse to the downside and impulse to the upside, giving us a zigzag something that looks like a correction that will take the market to the upside. But because most of us know that the market is currently in its downtrend, we'll wait for it here and wait for a kind of short double top here that will take the market to the downside. So you need to understand that your patterns have to be in the trend. You have to find your pattern based on the current trend of the market. If you're looking for a bearish flag, you have to look for bearish flag in the bearish market. And if you're looking for bullish flag, you have to look for bullish flag in the bullish market. I believe you understood. All right. So in this kind of situation, I won't have to trade again. What am I going to do now? I'm going to take my Fibonacci from here and drag it to this area because the market slowed down around this area because of the confluence we have by the left side there. Because of all this area, that was why the market slowed down there. Quite understood. So we understand that because the market has impulsed to the downside, it will have to retrace to a certain level around this area or this zone before it continues to the downside. This is what we know will happen. So we can't enter the market right now. We have to be patient, waiting for the pattern that it will form, either bridging from this area or taking us to this up area before we can continue to the downside. I hope you understand. I'm putting more life into this teaching. I want you guys to understand this. You need to follow the trend. You have to the impulsive leg you're following. Make sure the impulse that you're following. If you see an impulse to the upside in a downward market, in a downtrending market, then you have to wait for an ascending pattern so you can you can continue with the market to the downside. You understand? You can't just because it's impulse to the upside, then you expect this area now to become a flag that will continue the market to the upside. No, guy, it won't work like that because most persons we have in the market are following the trend, all right? So the majority are following the trend to the downside. Only you can't push the market to the upside. You have to do what everybody is doing in the market. Do you understand? All right, that makes sense, right? All right, with that being said, I'll go to the second one. The first one is the trend. I don't know if I should write it out somewhere so you guys can be able to pick it. Let me see how I can write it. The first one is a trend. Okay. Then, bro, where are you? Okay, the color is white. Let me change it to black. Okay, nice. So the first one is the trend. All right. So the second one now that I'll be telling you guys is 1, 2, 3. You know what this is, right? This is risk to reward ratio. Risk to reward ratio. You people have to. You need a risk to reward ratio in the market to become successful in the market. You don't want to be in the market and expect your trade to keep going up to the sky like the sky up before you want to like get out of the market. One trade cannot just do everything for you. One trade can boost your account and bring you to a substantial level where you can be able to have good capital to trade. But one trade cannot just make you rich for life, bro. You have to learn how to capitalize on your risk to reward. Let's say, for example, you have a risk to reward of 1:2, right? 1:2. That simply means that you're risking one to get two, all right? You're risking one to get two, or 1:1. That means that you're risking one to get one. Okay? Let's say 1:3. This is a good one. Alright? As for me, my risk to reward is 1:10. Based on my strategy, I have tested it and I understand that this is what I can be picking up from my strategy, and that's why I've increased mine to 1:10. I was running 1:2, 1:3, and now I'm presently at 1:10 based off my back testing and everything, and the way the level at which I understand my strategy. So you don't have to just jump into the market and just see, you have to be organized because at the point the market will pause and retrace back to the upside, and that's why you need your risk to reward. You have to get something from the market. And let's say, for example, you've been running your risk to reward ratio for like a couple of periods, and you understand how this risk to reward work. What do you have to do next? You have to, like, let's say, for example, initially you're entering your trade with 0.1. So with a clear good understanding of your risk to reward 0.1, you good understanding of your risk to reward. Yeah, time will come when you will increase your risk to reward your lot size to 0.5. Okay, and the time will come where, based on understanding, you start stacking one standard lot size. It's based on belief, how far you've traded, how far you've understood your strategy. You understand, right? And how far you can be able to like trade with it wherever you find yourself. You understand? And you have to learn. See, a strategy without risk to reward ratio, trade management is not a good one. And most of these things are not things you be able to see online on the media. Instead, there are things you build by yourself just by you keeping focusing on the chart. Okay, that is how it is. The psychology and everything is there. There's a word that the patient dog eats the fattest bone, right? But bro, see, look, let me tell you what. If you don't know what you're being patient of, you won't eat no fat bone. That's as simple as it is. It's true. You know the pattern. You need the system in the market. All right. You need to identify the trend. You need to learn how to enter into your trade. And you need a risk to reward ratio. That's your cut in the market. You need to before coming to the market, you need to tell yourself that okay, this is what I'll be picking out from the market and be piling it up. And at the end of the month, I'll have to go back and check what I've made. So you don't focus on what you're making in a day. I hope you understand what I mean. So you need a risk to reward ratio for you to be able to be successful in the market. And there's something about risk to reward ratio. You don't have to come and be giving yourself unrealistic risk to reward ratio. Risk to reward ratio comes based on how you tested your strategy, how far you have gone with it. Do you understand how far you have gone with it? Then based on that, you can decide on how you want to like set your risk margin. Okay, so I'll write the third one. The third one is pair. The third one is pair, or should I say symbol? Should I say symbol? Yeah, because of what I'm trading. So let me tell you one thing, bro. Guys, let me tell you something. Most time you come online and you see the gurus trading many pairs. You see some gurus trading 4 pairs, some trading 5 pairs, some went as far as trading 15 pairs. And because of that, you want to be everywhere in the market. You don't have money. Why are you moving like that? You don't have, just like I said, I don't want to make this video long, so I'm going to make it short and give you a clear gist on how to go about it. See, let me tell you what, focus on one pair. One, the reason is because every pair has the way they move. They have their own functionality process, their own system. All right, so you need to focus on one pair, understand the nitty gritty of that pair, understand the nitty gritty of that pair, how the pair move day and night. So with that, with sticking to one pair, it will even allow you to understand the trend you're currently on. All right, the trend you're in. It will help you to understand when day breaks, when you get to the chart, you want to know, you'll be able to know where the direction to trade to because you're attached to the pair, right? So you see guys trading 4 pairs, 5 pair. The truth of the matter is most of these guys are doing pair correlation. Most of these guys are doing pair correlation, PC. And this is one thing most beginner traders doesn't understand. And that's why when you see guys doing a lot of pairs, you just want to follow up with them. Don't be like that. Since you're starting up, you have to focus on one pair. Build yourself around that pair. Then when you're good, everything you know on that pair, you can start transferring it to another pair. Be piling it up. As time goes on, as you start normalizing your strategy, start becoming part of you. then you can do whatever you want. Don't start as a beginner and be going to 5 feet. See, one is concentration, two is distraction. You have to concentrate on one. Simple, short, simple, short. Yes, guys. So I would have loved to say a lot, talk a lot about this whole stuff, but I'm going to end the video here because I don't want to push any further and I don't want to make this video too long. So maybe in my subsequent video, I'll try as much as I can to expand my teaching on this area and so you guys can follow up. So for now, I have to go. Thank you guys. I so appreciate. If you've not subscribed to the channel, hit on the subscribe button. And if there's anything you're lacking that you want to talk to me about, drop it on the comment section and I shall reply to your comment and see how we can go about it. Alright guys, so like I said, I don't know if I've mentioned this before. I have scrambled my mentorship. I'm not into mentorship for now. So beware of scammers. Don't let anybody come to you with my name or brand name telling you that they are me or they knows me or they want any form of mentorship fee or whatsoever. No, for now I'm not into any mentorship. If so be it that I want to start mentorship again, I shall update it on this YouTube platform so everybody can be able to pick from there and just key into it and we can start from there. All right, so bye guys. Peace.